Good morning, my friends. You are watching on your TVs in Texas and Louisiana. We're on the Smart Money Culture TV network, as well as streaming around the world on multiple platforms as we do. Well, it is the Black Monday market meltdown across the world as everyone prepares for World War III. And let me tell you, it is not as romantic as some people might think it is. And everybody throws up their hands and, oh, okay, it's fine. This is what they've told us will happen. This is a fun time. It ain't a fun time, guys. We don't want the apocalypse, okay? If you read what happens in the apocalypse, many people will die, and that is not good for anybody, and it certainly is not good for business. And actually, the truth is, I don't think it's the time. I don't think it's the end times anyway. We just have one group of people who is trying to put all of the pieces in place to fulfill what they think is the end times. And here we are. Now, we have global market meltdown. We have the Nikkei over in Japan that is down like 12%. We have markets all around the world down, 5-6%. Dow futures are down like 6%. No, I'm sorry, that's not right. But they're down a lot. Let me see. Let me look at that again. When the futures drop more than 500, 600 points, that is considerable. Down 1.5% Dow futures, down 608 digits there. Gold is really the only one holding up at the moment. I hope that you listened to us and that you bought some gold and silver for yourself. If you haven't done that, you should probably start doing it right away. Go to @CostMetal. If you're on X, just go to @CostMetal with no S, @CostMetal. But anywhere else or whatever, just go to your computer, @CostMetals with an S.com. Use the referral links club and start getting yourself some gold or silver. Gold is the only, I looked across all the markets that I could see in the world, and gold was the only one that was holding. It might even be positive as we are talking. No, not quite positive, but it's 0.25% down. It's down $2,400. It's $2,463. It's down $5, $6. Okay, guys. Crypto markets completely melt down. The thing about Bitcoin now is through the ETFs, the same central bankers have bought the heck out of it and pushed it up so high that it's easy for them to control. So it's the same people now in Bitcoin. You got to get some of these smaller chains that are similar to Bitcoin that you can't seize and freeze and stuff like that, like ours, like Global Boost. Nice price now. Of course, that's full disclosure. We started that one, or helped to start it a decade ago. Anyway, yeah, it's brutal. And you have Iran over there, and they are, they're going to attack at any time. Russia's been sending them weapons. Nobody blames Iran. We have I don't know, maybe you do. I don't blame Iran. I don't think most people of the world blame Iran. I try to stay away from it a little bit. But, whether you want to say the numbers are fake or not, I really don't care. They've been burning entire families alive with like fire guns over there in Gaza. And they've been dropping white phosphorus on entire families. I don't care who you are. I don't care. Sometimes I usually obviously, I always kind of tell it like it is. Sometimes I try to make it a little bit more digestible for people, maybe. But when you do that, it comes back to you, folks. It comes back to you. And I know, oh, they started it, or this and that and the other. And that stuff's been going on for thousands of years. And you don't just annihilate entire families. You burn them alive. Drop white phosphorus on kids. I'll tell you what, my father was in Vietnam. And in Vietnam, they did a lot of different things, of course. One of the reasons why I am who I am and why I didn't go in the military was because I understood what was going on. I talked to my good friend Bo Paulney actually yesterday. I picked up the phone and called him. My father ordered his book, and brothers and I were all talking about him. I know Bo Paulney for years. So I picked up the phone and I called him. I said, "Hey, man, you're one of the only guys out there I know that is telling it like it is." I said, "I don't know why all of this PSYOP stuff doesn't work on me, but it doesn't. I look around at what's going on, and if you take Britain, for example, you have you guys running around in Britain, and I see guys like Andrew Torba, and man, I got a lot of respect for Andrew Torba and Gab. I mean, the guy's a legend. But if we promote, if nothing's gonna happen. They're gonna go and they're gonna protest, and they're gonna have some scrabbles in the street with the Muslims over there, okay? And I mean, just because they're Muslim, I mean, what are they? Most of them are not. I don't know if most of them are Africans or not. I really don't know. But I know that there's a lot of different ethnicities over there, and some of them probably happen to be Muslim. But nothing's going to happen. Why? Because you got to look at who brought them there. We have a central banking cartel that has taken over our countries. They conquered Europe without a shot. I talked about it multiple times on the show. And they did it with the euro. They got all the countries under them with the euro. And I know Britain kind of X'd off, and they still have their own currency and everything else. I mean, kind of, you know what I mean? But it's still the same central banking cartel anyway that is in control of Britain. It's the same cartel that we have. And through the NGOs and the money printing and everything else, they have flooded our countries with people that are from a different culture. They're different people. And it doesn't mean they're bad. And it doesn't mean that we can't have some type of a future together. But they're looking down right now at the chaos in Britain, and they're laughing. They're laughing. That's exactly what they want. You got the poor whites fighting the poor browns. And the only thing that's going to come out of that is more laws and more restrictions and a bigger police state. My call goes out to everybody. Work together. Go after the people that have enslaved you. Go after the people that brought the migrants there. And that is the central banking cartel. They funded all the NGOs to bring them in there. They funded to bring them in there. Okay. They make sure that the funding is there. They steal your money by diluting you. They dilute your money supply and through taxes as well. And then they give it to those people. They're basically funding, and they do the same thing over here. Over here, they're not all Muslims because we don't have a big Muslim population maybe yet on our south side, but they bring them in from Central and South America. And I don't blame any of those people for coming to our countries. If I was them, I would come too. Wouldn't you? You got a debit card, you get free money, you get to stay in a nice hotel. Probably nicest hotel some of these people ever stayed in their whole life. Come to Great Britain, come to Ireland, come to the United States, start a new life. Wouldn't you come? I would come. I don't blame them. And they're human. They're human beings. They are human beings. And I don't think that there's I think that there's a future in working together. We have to work together. We have to work together in order to save ourselves. We have to work together. So in Britain, all that's going to happen is they're going to arrest a bunch of people, and they're going to bring in more laws, and it's going to cost more money. And that's it. And that's exactly what they want. The same thing they do over here in the US. They want everybody, they want us fighting each other. Basically, they want to say, okay, it's the Browns versus the whites, right? The Browns or the Muslims versus the Christians, and this and that. I'll tell you this, and I've said it, I don't know if I've said it publicly before. The Muslims and the Christians come together. We both believe in Jesus. The Muslims and the Christians come together, and we can save the world. And I actually don't think that the world will be saved without that happening. It might not be, we might not be able to save it without it happening. But that's what needs to happen. We can do that. That's what should happen. But the main thing I want to focus on right here is, you see, right? And the Fed. That's the central banking cartel in the United States. Guys, we have to free ourselves from the central banking cartel. If you guys want to protest in Britain, which I think is a great idea, and I mean, gosh, I understand. I can't understand, right? Some girls got knifed to death right in my neighborhood. Yes, I can't understand because I'm not there, but I can imagine I would be furious as well. And it makes me furious that it happened even over there. I've been to Britain many times. Wonderful place. Love you guys. My family is actually, I'm English. My father's straight English. No, German, French on my mom's side. But don't go and protest against the poor Browns. If you're going to protest, go to Parliament. Go stand outside of Parliament. Go stand outside, actually, even better, go stand outside the central bank and demand that they stop bringing the migrants. Not only do they stop, demand that they send them back. That's the other part about it. You guys want to, and I'm not coming down on you. You guys want to do this. You guys, I'm talking to my own country too. I'm talking to the West. Right now, it's bubbling over in Britain. And I see people I have a lot of respect for egging it on. And all you're going to do is get yourselves in more trouble. And look, charter a boat, start loading them on the boat and send them back home. You want to make a difference? Charter a plane, load them on the damn plane. That's making a difference. Running around the streets, looting, chaos. That is exactly what the globalists wants. That's exactly what the central banking cartel wants. That's what they want. They want chaos so they can bring in more of a police state so that you're more of a slave. You're already a complete and utter slave. It's not just you. It's us too. We are slaves. These people tax us as much as they want, whatever they want. The war in the Middle East is entirely funded by us. It's entirely funded by Christian people of the West. We're funding it. And at the same time, we're funding the invasion of our own countries. And the central banking cartel, who you almost can't even talk about, I talk about it every day, is the one behind it. They're the ones doing it. And you're going to go out in the street and fight the poor Browns? And I get it. Everybody gets upset. Actually, and the poor whites and the poor Browns, I got that. Andrew Tate, yeah. And he actually, I'm going to take another analogy from him yesterday. He says, if you put red ants and black ants in a jar, they won't fight each other. But if you shake the jar up and then you stick it down, then they'll start fighting each other. Because the black ants don't know the red ants must have shook it up. And the red ants are like, oh, well, the black ants must have shook it up. We got to start thinking ahead, guys. We have to stop being reactionary. You have to start thinking ahead. This is what I talked about, and it's funny. I asked Grok about myself one time, and it said I jokingly talk about my wife controlling, but my wife thinks ahead, right? She'll like think a few steps ahead. In order, I would always, oh, it's true. I would say think like a woman, because a woman, and I don't want to make anybody upset here, but over thousands of years, they're obviously, the man is historically and stronger and everything else, and she has to think, okay, how can I control him? How can I get him to do what I want him to do? Maybe it's a better way to say it. So she's got to think a few steps ahead. Well, I do this, do that, do this, do this, right? And the man is just kind of, oh, we're different, right? So you got to think like a woman. You got to think a few steps ahead. So let's talk about the markets here. I have the great Matt Dixon. Matt Dixon's joining us from Mobile, I believe.
Yeah, hey.
Hey, sir.
Yeah, hello. How are you doing?
Good. Well, you're looking nice and sporty.
Thank you. Yeah, that's keeping fit. Me too for these markets, because have you seen the way the markets are going? I haven't seen your show this morning. I assume you've been discussing it.
I discussed a little bit of the markets, and then I got it kind of on a tangent with everything else going on. I did lead out with the markets, of course. It's the global market meltdown. The only thing holding steady is gold.
Steady to some extent. Where's gold? Let's have a quick look. Yeah, okay. Even gold's down. Well, it's still down 1%. Yeah, but gold is the safe haven in times of trouble. These are clearly times of trouble. Now, we did warn about this the other day when we talked about the yen carry trade.
Yes.
That was really, really absolutely key. We said it's a really good indicator of what's happening in the market. So back in 2007, it was the unwind of the yen carry trade. Now, just to probably good idea to explain exactly what the yen carry trade is. The yen had an interest rate of 0.1%. So you could borrow money effectively at almost 0.1%. You could borrow money at next to nothing. Now, even if you invested into US Treasury bonds, which are very, very safe at, say, 5%, for example, then you get a massive return on your investment, because you can borrow for nothing and you can receive 5%. So effectively, you're just collecting money. It's costing you nothing to collect that money. Then you're investing it at 5%. And what you tend to do is actually leverage it. So you're not satisfied with 5%. You want 25%.
100%. You want 20%, 50%.
Exactly. So you just leverage it like crazy. And then the problem is, this is all very, very good, because whilst the yen was, whilst this was still possible, but borrowing at low interest rates, but the problem is, you leverage into these high risk assets like the S&P 500, like Bitcoin in particular, because Bitcoin is effectively a highly volatile asset, but massive returns when things are going well. So you leverage into things like Bitcoin. So Bitcoin, when you're getting a return from, 4x we had from the 15,000 FTX low to even to 60,000, you're talking 4x there. And when you can borrow money at nothing and then 4x it effectively, you want to leverage it as well. And as you say, 25x leverage, which is actually perfectly possible in the markets, very possible in the markets. Then you're getting, absolutely phenomenal, eye-watering returns, which are all great. But the minute things start to reverse, and they reverse the yen carry trade effectively, people have to, when things like this happen, you have to basically pay back your borrowings in yen, and you can't afford to hold your position because you're leveraged and they're coming down rapidly. And so you have to cash in your position and pay back your yen borrowing. And that actually multiplies the effect. So it's like a snowball rolling down the hill, picking up steam as it goes down.
It'll make you cry. It'll make you cry.
Absolutely.
I wouldn't know firsthand, of course, but
yeah. So this, as I say, I actually made a lot of money back in 2007-8 from this unwind of the yen carry trade. Basically, when money is flowing back to the yen, so the yen strengthens. So that's exactly what's happening. The yen is strengthening. And whilst I can't show you because for some reason the connection isn't great on my computer, this yen has strengthened absolutely massively. There's some massive red candles there showing money flowing back to the yen right now, out of risk assets. And so we're looking at Bitcoin now at 51,000. It dipped to 49,000, I think it was overnight. But from 73,000 to 51,000.
49. Yeah. I think you said 41. 49.
Oh, sorry, 49. That's what I meant. Yeah. So 51,000. It dipped to 49,000 overnight. Yeah. Now, the big question is it over or is this just the beginning? Well, my feeling is that this is currently a modest correction that will push higher again. But we have to look at what's causing it. And it's actually not the Fed. It's really interesting to see the Fed because we discussed that a lot as well the other day on Friday about it is all part of the problem. So the Fed are beginning to see, we got bad employment figures out on Friday, of course. So unemployment is picking up. Now, I've shown on multiple charts in the past that this is going to be the first sign of the US heading to recession. So this is what's happening. So we're starting to see unemployment picking up. So we then saw if unemployment's picking up, we know the Fed are going to have to lower interest rates to try to stimulate the economy. So some people have been saying it's basically the Fed trying to support the stock markets, etc., trying to keep the stock markets afloat. That's not the case now, I don't believe. I think that because we're seeing the real economy starting to slow down, so we're starting to see real estate having problems, we're seeing unemployment picking up. And this, I've said it over and over again, back in 2007-8, it was a problem of the economy that caused money printing and caused interest rates to then fall. Same with COVID, the COVID time when we got the money printing then, that was actually the economy. The COVID wasn't the reason. I mean, everyone puts the reason on COVID, but the economy was beginning to slow down drastically. And COVID was used, I believe, as an excuse to create more money printing, to cover up the problems, the mismanagement of the economy. And this is precisely what it's been, because money printing does not fix the economy. Money printing is kicking the can down the road. It's basically like when you've overborrowed on your family credit card and you think, oh dear, I haven't got enough money to repay it. But if you had the facility to go into your back garden, a shed or whatever, and print some more money to pay off your credit card debt, that would be great, wouldn't it? And that's exactly what the Fed are doing. They're basically going into the back room, printing some more to pay off the debt. Now, it's good short term. It covers up the problem short term. It's actually just kicking the can down the road. And the problem is every time you kick the can, the problem gets that much worse next time the money runs out. And what's happening is now, again, the money's running out. So the money ran out in 2008. The money ran out again back at the COVID time. So they printed again. The money is now running out. And the problem is each time it's getting worse and worse and worse. Now, they may manage to kick the can down the road yet again. And they will have to come out and print more money again, unfortunately, to try to cover things up because they can't face the problem now. The problem has become so big. If they'd faced it from day one, but politicians don't want to do that. They don't want to face it and basically address the issues. It makes them look bad.
Right.
So they cover it up. Let the next administration deal with it. We don't want to be responsible for all these problems, making things difficult for people. Let's kick the can down the road. Let the next administration deal with the problems.
Let's hire a bunch of people working for the government and call it new jobs. We don't want to be the people that have less jobs. Yeah, no, absolutely. Yeah, but now we're 35 trillion. We owe the central bank $35 trillion. I didn't come out publicly about it, except in some chat groups. But it was kind of funny. I mean, I love Trump. You know what I mean? I wasn't a Trump guy, but him saying he's going to pay off the national debt with Bitcoins. Well, the Bitcoin market cap is a little over $1 trillion. And we owe the central bank $35 trillion. I don't think they're going to be accepting Bitcoin anytime soon.
Yeah, the problems are bigger. And crypto people have been saying, oh, Bitcoin's a solution. Clearly, it's not the solution. Bitcoin market cap is still tiny compared with the world problems. And as I've always said again, from years ago, back on CNBC, I was talking about Bitcoin. I said, when the crash comes, Bitcoin will also crash with it. Yes. I believe that Bitcoin could rise from the ashes after, because it'll be one of the few things that can be used to easily transfer money around the world. And it has the attributes of gold. And don't forget, it has better stock to flow ratio than gold now. So in other words, they're producing more gold compared with the amount of gold in existence than they are new Bitcoin.
Yep.
So stock to flow ratio, or basically the amount of Bitcoin that's being produced, is less compared with the amount in existence than gold compared to the amount in existence. So Bitcoin, from a store of value, is actually still a very good asset, but it's still also driven up massively by speculation. So there's been massive speculative drive right from the beginning. And it's just evolving. It's on the journey to becoming digital gold. It's certainly not there yet. It's nowhere near there yet, but it's on a journey. So from the beginning, 2009, it was 100% speculation, pure gamble, speculation. But as time has gone by, it becomes more and more of a store of value. And particularly the ETF earlier this year was actually just another step on the road on the evolution to becoming a store of value, more like digital gold. So gold is still the real store of value, because Bitcoin is only on the road, the evolutionary road to becoming a store of value. It's not there yet. And I think it'll actually take the full market crash that will come at some point for Bitcoin to take on its role of the real, true digital gold. So where are we at the moment? This is what's the question on everybody's mind in terms of this correction. Well, I hope and believe, and from an Elliott Wave perspective, and I wish I could show you the charts, this does look like just a correction, and I still believe we've got higher to go on Bitcoin. So personally, I still think that this is another DCA opportunity, and this is why I'm always talking about dollar cost average, because even on Friday, I was saying it's DCA opportunity.
Yep.
And if you put all your money in on Friday, you'd be crying today, as Bruce said. People cry. And that's why you don't put all your money in one go when you've had a market pullback. That's why dollar cost average has to be the cornerstone of sensible investment into volatile markets, because nobody knows precisely where the bottom of the market is. But I think this is another opportunity to DCA, because if we rebound, as I believe we will rebound, then from 51,000 where we currently are, 51,024 right now on Bitcoin, if we were to go to previous all-time high, we're talking 40% higher from here, aren't we? More than 40% higher. That's just to equate to the previous all-time high. I actually think we're going to go to 84. Then we're talking 60% higher. And I think that'll probably happen this year. Now, there are no guarantees. We're not financial advisors. And it's all about risk and reward. And so you don't invest money that you cannot afford to risk effectively. But looking from a risk-reward perspective, I think this is good. And they do say, when there's blood on the streets, that's the time to buy. And there's some blood on the streets today. The stock markets as well. We look at the S&P.
Dude, Nikkei is just total meltdown. Of course, the yen, as we talked about a little earlier, I mean, but Nikkei down like 12-13%. Dow futures down, 1.5%. So is the Hong Kong Stock Exchange anyway, I think. Go ahead.
Yeah, they're going to be hit hard today by the look of it. Yeah, so I think that, that, as I say, looking at the reasons for it, the reason was not just the US. It's all interconnected. It just shows how connected the world financial system is. So this yen carry trade, the Japanese, in some ways, they raised interest rates because they got problems with inflation. But don't forget, the US still have problems with inflation. Their inflation is still above target. And yet, this just shows how bad the mismanagement has been, how bad the situation is. And they should have done something a long, long time ago, because they've still got inflation above what it's supposed to be. And yet they've got the economy slowing. We've got jobs slowing, the unemployment rising. We've got real estate beginning to, underwater. So we've got all problems with the economy, and yet inflation is still higher than it should be. So what do the Fed do? Well, actually, there's only one thing they will be able to do in future, and that's some kind of crazy monetary policy linked to money printing yet again. So
they have no other choice. Well, crashing the markets like this, they're able to take a lot of liquidity out of the market. So they can then basically it's a transfer. Now they're giving all this free money to the different migrants that are in our different countries, as well as paying for war. How it's the easy way to do that. You don't want to dilute the money supply as much. You crash the markets, take everyone's money that way too. I mean, the central bank has so many tools at their disposal to take our money. That will make you cry too.
Yeah, people don't want to accept the sort of, we've said, I think we mentioned it on a show before about boiling a frog. You put it in a pan of water and just warm it gradually, and the frog doesn't even realize it's actually boiling to death. And that's kind of the situation that we're in. The economy, and we've been shouting about it for a long time, that things are not good. Right from the very first show that we did last year, we were talking about problems with the signs of recession. The first signs is going to be a tick up in unemployment. Now we've seen that. That's what we got on Friday. Unemployment rising now. These are the first signs, but we had the inversion of the bond yield, the bond curve. The fact that long-term interest rates are lower than short-term, that is not right. There's something wrong there.
Right.
There's something wrong. It's like you go to the doctors and he looks at your symptoms and, wow, you're sick. You've got spots all over you, etc. Well, these are the spots all over the economy.
Right.
There is something wrong with the economy when you see the bond, the yield curve inverted in that way. Long-term rates should not be lower than short-term rates. There's something wrong with the economy. It means that the long-term outlook is absolutely horrendous because they know they're going to be lowering interest rates in the future. Interest rates are lower in the future than they are now. So these are all just symptoms of the disease of the economy. And they tried to treat this disease, unlike a doctor where they should be treating the underlying causes. They're just saying, putting sticking plasters over all these spots so you can't see them. Oh, there are no spots in the economy because they put sticking plasters over it to cover it up. And that's exactly what this money printing is. It's sticking plasters over the problems. I hate to be so negative. I hope the market hasn't finished its move up. We did talk again on the previous show about the long-term outlook for the market.
Yep.
I talked about some Elliott Wave guy, Sid Norris, and he has some long-term predictions on the market that we're about to have one of the most serious market crashes of all time. And I believe he's right, but I don't think we're quite there yet. And my hope is that we still have another push higher to go on the markets. I still believe we have another push higher to go on the markets. Although short term today, right now, I mean, Bitcoin has just dropped. It just dropped below 51,000 a moment ago. So things are looking serious. But I actually think that this is probably a wave 4 correction, and we'll have one final push higher. But after that final push higher, I think all bets are off, and I think things are looking extremely negative. And we talk about problems around the world, and we could see the symptoms of things, as we said, unemployment, etc., etc. These are the precursors to recession. But recession is also a precursor to geopolitical trouble. And that's happened historically in times past when everybody starts to be struggling financially. This foments trouble geopolitically. And we're seeing those geopolitical troubles bubbling away. We still know there's problems. And strangely, the oil price, have you seen the oil price today?
Yes.
Is down. My computer isn't. Oh, okay, it is working. Yeah. So we've seen oil price down at $72. I've got it. I think this is okay. Yeah, WTI crude down at $72. So it's down sharply at the moment. This is telling us that again the market is blind to the risks that there are, and this is the problem. The market is so transient. It just sees what's in front of it. It's not factoring in. It's not factoring in the risks that there are. So the risks of an escalation in the Middle East. So between, I don't think Hezbollah want an all-out war because they probably, no. I'm sure they win it. But the problem is all these things around Israel, pushing at Israel, it's just brewing there. And we've still got problems of, with China and Taiwan. And there's so many issues. We've still got Russia, Ukraine. There's all these issues bubbling away. Nothing has actually erupted as yet, but it only takes one of these issues to erupt that will actually set off all the rest as well.
I mean, everyone's saber rattling with the nukes is all under the breath. Israel's like, we're going to nuke everybody. Iran says we have nukes now. God bless Putin for not nuking anybody yet. Or whatever you want to say about it. I mean, I don't know, but Ukraine gave up their nukes. That's one of the reasons why the U.S. is we're supposed to take care of them. But it's a mess over there. BlackRock owns over 50% now of Ukraine. It's crazy. So I mean, we're really just the mercenaries of the world. We're just the mercenaries of the central bank. I hope people are waking up to it. Even over there in Britain, you see these guys. They're on the street. They're fighting. You got the Browns, the poor Browns fighting the poor whites. They're fighting the wrong people. Why don't you guys get together? Go fight out in front of the central bank. Go fight out in front of Parliament. Get those guys. That's how you're going to make change. You're not going to change anything just fighting each other.
Absolutely wise words, because this is the problem that they're quite happy to see people fighting amongst, squabbling amongst. What's that saying? Something about while Rome burns. I can't remember now, but
I don't remember. I don't know the saying, but yeah, absolutely. They'll use it to make more laws. People will be able to say less, do less, and they'll print up some more money and tell everyone they're doing a great job.
Yeah.
Well,
yeah. I'm looking at Toncoin, which again we've been saying Toncoin is a great investment. It actually bottomed out at quite low this morning. It was 4.6. It's now 5.18. That 4.6 was almost exactly where the previous low was back in May. So it's moved quite a bit since May. So this appears to me to be just a corrective move down. I'm really bullish on the markets, actually. Personally, I'm really bullish.
I'm like, listen, I'm gathering cash. Absolutely. I am. I mean, absolutely. It's fireside sale right now. And it could go down some more, guys. But that's why, as Matt's saying, you dollar cost average in. But Toncoin at $4.90 or $5. I mean, that ecosystem is booming, man. It's booming. And I talk about Dogger Flower all the time, but that the community there is booming. Like, and I'm getting on these spaces, these Ton spaces. I don't know how they pop up for me, but I get on these Ton spaces and it is booming more than any other ecosystem that I'm seeing right now.
Yeah, so I think these are opportunities. I mean, I'm looking at some of those that people have been really fanatical about. Jasmine, it's down 25% today alone. Absolutely horrendous. But these are times of opportunity. So if you're not fully invested in the market, and as we've always warned, just dollar cost average, chip in little bits here and there. And every time there's a pullback, I think it's an opportunity to add a bit more to the market. So if you've been fully invested in the market, just being bullish. And this is why these, what I call perma bulls, people are permanently bullish and they have everything invested, just think it's going to continue to the sky. I mean, that's okay as long as you're not leveraged and it's not money you need tomorrow. But the trouble is people are greedy and so many people are actually leveraged in these markets. And if you put all your money in with leverage, then you're going to be in big trouble. And what this volatility is showing us is this is actually just taking easy money. It's taking candy off babies, or I don't know what you're saying is in America, but
yes,
basically easy for the big institutions to collect this money because they can see all these retailers. They jumped in with on all the hype and you're going to make loads of money, etc., etc. Jump in with leverage. They can see where your positions are. They can see that Mr. X is leveraged so much and his stop out position is wherever it is. And if they were to sell off and move prices here, they collect this much money. And it's a simple computer calculation that actually they can sell, move the markets, drop the markets where they need to collect the most money possible. And as you say, this is a time for them to collect money. As you say, it's kind of taking liquidity from the market. And then they will apply it at the right time and the markets will rocket. But at that time, all those retailers who sold off in the bloodbath, when there's blood on the streets and sold everything, capitulated, that is the time when you should be buying, when everyone's capitulating. And that, I think, is somewhere around where we are now. Again, we don't know for sure, but it's probably good if you have something spare, maybe the DCA, and look at where you can jump in at these markets. So Solana at 117, it's only a few days ago, it was 170, and it's now 117.
Yeah.
So I think Solana has a tremendous future. I think personally, probably better than Ethereum, personally, from a use case perspective. So Solana's down 15% today. Ethereum's also down 15%. So I think there's tremendous opportunity there. Interestingly, the dollar DXY is down very sharply. We actually said that we thought it was going to break through that support zone, which is precisely what it did. Yeah, so we said there's a very clear ABC correction higher. So previously it backed up that support, did ABC higher. So we said with it being ABC higher, the trend direction is down, so we need to break that support. We've now solidly broken that support. We've gone to a previous support level almost precisely. So I think that we're going to start to stabilize now on US dollar. I think that yen carry trade will stabilize now. So we've had a massive strengthening of the yen because of this sell-off. Absolutely massive. You wouldn't believe it if you see the chart. But
which chart were you looking at now?
I'm looking at the US dollar against the Japanese yen.
Oh, yeah. Oh, yeah.
People have
that's on one of my pages I look at every day. I mean, the entire page is red.
Yeah. So if you remember Friday, it was actually Friday we talked about this. We showed that there was regular bearish divergence on the dollar against the yen chart. That was telling us the yen was going to strengthen. The dollar was basically going to weaken massively. And the yen was going to strengthen. That's precisely what's happened. So money's flowed out of the dollar into the yen. And that's just as we equated that back to 2007-8 time. That's exactly what happened then. That basically money just was being repaid back into the yen, which causes yen strength and causes stock market crash. That's precisely what happened. I think this is just, and as I say, I hope this is just a temporary situation, but this is just a rehearsal for what's going to happen in the future. So this is just a dress rehearsal. It's not the real thing, I don't believe. So this nasty correction is nasty and painful, but I do believe we're going to rise to new all-time highs for Bitcoin and for a lot of risk assets, even for the S&P 500. Maybe the correction's not over yet, but we're going to rise to new all-time highs, I think. But this little dress rehearsal is just a forerunner of what's coming, because what is coming, whether it's the end of this year, whether it's probably next year, somewhere, not too distant future, we're going to get the real event. And that's when money printing they're going to go crazy on money printing to try to keep everything afloat. So right now is probably the time to be making money. So make hay while the sun shines. And the sun's out right now, but I think it's about to shine. And
take your profits and put your stop losses in. Really important. I was talking to one of my brothers, my other brother, James, and he'd caught one of those waves. He said, "God, man, I'm so glad I took my profit."
Yeah,
that's the game.
It's definitely good to take your profit. It's definitely good to have risk reward. So right now, there's a good risk reward trade out there. And again, don't be putting all your eggs in one basket. But right now, we're visiting lows that were visited. If I looked at, for example, Solana. Yeah, I mean,
Solana's popped around a few times.
Yeah, so we keep revisiting those lows. I mean, even back in May 24. So I mean, it's not that long ago now, but we've revisited those lows. I think we just pierced those lows, but I still think that this is very much a corrective move down in Solana. I'm really bullish. I mean, I couldn't be more bullish at the moment. I think the markets are a great opportunity. And again, please don't overexpose yourself and don't overexpose with leverage, because you never know. But if you can afford to risk in the markets, this is a great risk reward area to be jumping in. And, I just think that I know that nobody wants to. I mean, even looking at XRP had a massive turn down, but it's not that massive in context. I mean, we're down 13% today. We had an ABC down from that previous high I talked about, the 90 odd cents. We've had a very nice correction down. We began to push higher. We're still not pushed below the previous low of 38 cents. We could still do that, but I think it's another great opportunity for XRP. So whichever asset you look at, I think, and the more volatile the assets, by the way, the more the opportunities are. So Book of Memes down 21% today. So I did say the other day, did really, really well on Book of Memes, closed the position. So very, very important, I think, to actually take profits, as you said.
Yes. Yes.
And then just filter a little bit back in when the market's pulled back. So basically buy the lows, sell the highs. But you need to remember to sell the highs, not be too greedy and just think everything's going to continue to go up forever. It's always good. And especially with crypto being a volatile asset, you can actually jump into these assets. You can quite easily double your money on them. And when you double your money, take the first half out. That's all your original capital out. So if you went in with $100, it doubles to 200, which is quite conceivable with crypto assets. Then you take your first 100 out. Then no matter what happens, you've lost nothing, but you've got $100 in the market that can potentially take you to the moon. Then that's the time to be greedy with money that's cost you nothing, but not with your original capital. So right now, there are potential opportunities. I've had people reaching out to me today and saying, I've got some cash on the side. Is now the time to go in? Again, not everything at once, but it is time to think seriously about some dollar cost averaging, maybe put a little bit more into the market, because I think that I think we're going to still see highs from this, but we are entering some troubling times. I mean, those geopolitical issues, political issues all around the world, governments going, very much more right wing around the world, and they tend to be more sort of protective of their economies, so there's less international cooperation. We are heading in towards times of trouble, but we just need to understand.
It'll be interesting. I think if Iran does an attack on Israel and it's like the last one, then the markets could just spring into action. We could see a complete reversal of today, like 20% moves on assets up in the other direction. If they are successful in the Iron Dome, they're able to get past the Iron Dome and everything else, then we could be going further, probably going further lower.
All bets would be off then. But yeah, I mean, why didn't they go in with a massive response last time? It was actually very underwhelming. And
it was underwhelming.
And then Israel had a very muted response to that as well. And I suspect that's what they want. They just want to be seen to be doing something, but they don't actually want to create major trouble because it would be the end of them.
They obviously don't want to. Yeah, of course, it'll be the end of them. They don't want it to be the end of them.
Yeah. So the saber rattling. Yeah. For appearance sake, for their populace, to make them think, we're powerful, we can do this, we can do that, and our government are, protecting us, whatever. But they know that it's actually mutually assured destruction these days with the power of weaponry. So they just want to rattle sabers. And that's exactly what happened last time. And I don't think Israel have any interest in wiping out their neighbors either. So I think it's just a matter of appearing to be good to their own electorate, as it were. Although, having said electorate, I think Israel is the only true democracy in the Middle East, as far as I'm aware, isn't it?
I mean, you call that a democracy? Come on. And Israel wants to, the Greater Israel Project is a real project, and that includes parts of all those countries. So I don't know if I don't think they want to maybe wipe them off the face of the earth, but they certainly, and as well, the central bank, of course, they're all Israelis. I mean, we're not supposed to say that, but I mean, it's true.
No, it's true.
Yeah. So, they already are controlling everything. I mean, there's a lot there to unpack. I talked to Bo Paulney. You know Bo?
Yeah, I've heard of, I don't know personally.
Talked to Bo Paulney yesterday. My dad bought his book, and so my brothers and him were all reading it, and they're sending me pictures. I had to pick up the phone and call him. There's not many people that will tell you the truth, because of course there's many poisonous needles that can come your way. But it's important that in order for us we have to at one point get ourselves out of this mess, because we can't just be printed into oblivion, which is what's happening. And people aren't even having families because they don't think they can afford a family.
I agree with you, but we can't, we can't dictate our lives based on what they might or might not do. But you're right, the money printing is a problem. As I say, they should have faced the problems earlier on. And I don't know what else they can do. They will resort to money printing again. For the time being, though, I really think this is a temporary sell-off. I mean, I'm looking at dollar index again, and we had a perfect ABC where the C wave equaled the A wave on the way down. So that means we should be headed higher reasonably soon. So that just means a bit of dollar recovery. So if dollar's recovering, maybe a bit of money coming back into risk assets. So I think this will stabilize.
And the thing is that just as all of us are reaching for our cash to put in the market, well, the central bank has unlimited cash. So they had that. I mean, then that's their play, is they buy when things are low. And so at a certain point, they're going to start, if they haven't already, buying things back.
Yeah. And I'm just looking here, we got a very, very, very nice 1.618 extension on Solana. Absolutely precise. And again, I wish I could show you these charts, but you just have to take my word for it. So the move down to precisely 1.618 to the penny. So we actually went past the previous invalidation. So it's been a deeper correction than I expected, but it has extended to 1.618, which, as we know, is the golden ratio, is that important Fibonacci number. So I think that we are going to be heading dramatically higher very soon. So hopefully today the stock markets will stabilize. We'll probably get a bit of a sell-off, perhaps.
I have to think the U.S. market has to sell off too. Everybody's going to, you know how it is. They got to liquidate this and liquidate that to try to stay solvent.
Yeah, definitely play catch up. I mean, it's looking a little bit, but it's a 3 down, 3 up, and 5 down for the stock market, for the S&P 500. So whether we're at the end of it, I don't know, but I think we're reasonably close. And I think, again, just great opportunities. I did say that I think that we might actually head up towards that 6,000 mark before we see the major crash that might come in the future. So there's a long way to go back up, and we're right down at 5,002 right now. But there's real potential to push up to 6,000. Everyone seems to go with the trend. When the market's selling off, everybody gets bearish. And when the market's going up, everyone gets bullish. And it's exactly the wrong way to be, because clearly you're just running with the markets.
You don't win that way, guys. Okay.
Yeah. So you can look at, one good indicator is, as I've said, is RSI, and it tells you when markets are overbought and oversold. So right now we're in a very, very oversold position on the US dollar, massively oversold position. So you'd expect there to be a rebound there. And if I looked at Bitcoin, again, massively oversold on RSI, massively oversold. So looking from a midpoint of 50, the market's right down now at 15. And overbought is above 70. So and oversold, by the way, is at 30. So an oversold situation will be any reading below 30. We're currently at 15. So meaning we're massively oversold. So you would expect the markets to rebound from these sort of levels. So virtually all the indicators you look at are telling you the market is currently oversold. Now, that's always the case, even in the market crash, that they're oversold and they can extend further. But we're so oversold on these markets that I think that we're just due for a nice rebound.
Yep.
I'm shocked to see Doge dipped way below our target buy level. So again, dipping below those targets. We've actually dipped to a previous support almost. Still potentially even lower to go, actually, because if we reach the fib extension of 2.618, that would take us even a little bit lower. But I think we're there or thereabouts in terms of this correction. So I think that
that means that Elon must have sold off.
Yeah. So the previous low actually coincides perfectly with the 2.618. The 2.618 is actually 7.6 cents. We're currently at 8.2 cents, so a lot below our buy areas. But again, you'd just be DCAing. Again, this would look like a good DCA area because, as I say, the previous low coincides with a fib level, the 2.618, which is a very important extension. So I'd be looking to buy at 7.7 would be my next buy. That probably DCA even a little bit now, actually, and just DCA little bits and pieces. But A major level will be 7.7 cents for Doge.
Mm-hmm.
And I'm sure the likes of Elon Musk and people like that probably are buying in as the markets dip down.
Yeah.
And I think we should probably follow suit. Everything I see is in serious red situation. Yeah. So not a pretty sight, the markets this morning, but there's still hope. And I actually think that this is actually just opportunity. So yeah, hopefully if we take away anything from this today, it is that managing risk is all important. That we should never expose ourselves 100% to market. Dollar cost average is the way. And the other thing that we just learned from today is that when times are bad, when there's blood on the streets, that's the time to start buying. And that's actually Warren Buffett's old saying, isn't it? That basically that's the time to buy. And remember in the 2008 crash, it was him who came in and bought, I think it was AIG. He bailed out at the very worst state of the market. And that's, when smart guys like that, those are the guys that made money long term in the market. When smart guys like that are coming in times of trouble, when the markets are in the doldrums, that just tells us, well, maybe we should take a leaf out of his book. When the markets are in the doldrums like now, that's the time to come into the markets. So I just hope that we have a bit of dry powder and can jump in and take some of these opportunities.
Yes. Well, amazing. It's great. I'm glad you were able to join on your phone. I'm glad we have technology that we're able to do it either way. Is great.
Yeah. Hopefully we're back on with the charts tomorrow because, as I say, we have so far reached some really important Fibonacci levels. So these are levels, and I can see even as we speak that we're pushing down, another phase of pushing down in the markets. I think I think once the American stock market opens, we'll get a sell-off, but hopefully they'll begin to turn things around and we'll start to see markets rebound. But Solana, it's...
And the U.S. stock market had a pretty sharp decline on Friday as well. So, hopefully we'll see. I saw some funny charts. It was like, Lockheed Martin is, as I was going to sleep last night, big green candles. But that was just a little bit of fake news. I went, and if anybody's watching and saw that, they had stabilized. Maybe there was a green shoot, but then it was quickly eaten up.
Yeah, it's wow.
Not saying that they won't go up. I mean, they are, building more machinery, but
yeah. Wow. Sorry, it's just it's actually absolutely shocking to see some of the downside on these markets, but.
Right.
You just got to try and take a grip and understand these are the times of opportunity. So best just to close your eyes for the time being. They often do say that's actually the best time to invest is close your eyes, take a bit of exposure to it, but don't leverage whatever you do because if you take a position which isn't leveraged, you can hold it indefinitely as long as it's not money you need tomorrow. So I would just say definitely. Now is a time. So I'm jumping in with a little bit extra this morning, and I'll try to gradually phase in. If markets continue to dip down, I'll just add a bit more and a bit more to my positions.
Likewise. That's what I'm doing as well.
Good. Great.
All right. Amazing.
Yeah. Let you get on with the rest of the show. Let's have a catch up tomorrow, and I'm sure it's going to be better news tomorrow.
Thank you, Matt.
Thanks, Bruce. Thanks, everyone, for listening.
Talk soon.
Catch you soon. Bye-bye.
Great, Matt Dixon. Is always a pleasure to have him on the show. I'll tell you what, there's a lot of trading years that have gone in there. Matt and I have been working together for years now as well. I'll tell you, at times like this, you want to make sure that you have some dry powder around. Put some dry powder in there. Dollar cost average, though, don't go at all in. As I said, if Iran gives off some little attack and nothing really comes of it, and again, kind of like they did last time, then I think the markets will shoot up fairly quickly again. If, on the other hand, they are able to or want and do land a major attack that is substantial, then we could see a further decline, a further sharp decline in the markets. The central bankers right now control Bitcoin as well. They bought so much of it that they're able to control it. And again, that's one of the ways that they remove liquidity from the market, is by crashing the markets. They crash the markets, they sell, they crash the markets, and then they buy back lower, and they take all of that money in between from you or whoever's holding. And if you don't think that that's what happened, then you're not in the markets. Because otherwise you would know that is exactly what happened, because you don't have the money anymore. That's the way it works. The geopolitical situation is very trying, guys. And I think, you know, as people, and I talked about it a little bit earlier, but you know, we need to focus on fighting the people that are actually in control, and not hate each other, you know, and not hate each other. And maybe the answer is to deport, you know, all of these millions and millions of migrants that have come into our countries. I mean, sounds pretty good, right? Sure. But maybe we need those people. Maybe we need to work together in order to get out the central banking cartel. I mean, if the Browns and the Whites in Britain got together, they could throw the central banking cartel out of the country very easily. Very, very small amount of the central banking cartel and the elites, and massive, massive amounts of poor people. And when I say poor, I mean, you know, making under $500,000 a year, making under a couple $100,000 a year, you're poor. These people are operating on levels that most of you guys don't understand. Massive amounts of money. But just fighting each other is just playing into exactly what they want. That's what they want. They want us to fight each other. They want us to hate each other. And so as much as you get mad at the other side, it's like I said earlier with the red ants and the black ants. Try not to respond like that. Respond to the people that have enslaved you, not to the ones that put all the slaves together. And I think that's it. I could dive into other stuff today, but it doesn't feel like the moment. I'll be back on TV in a number of hours. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.